Hello, everybody. Jim Malone coming to you live on Dallas Trading Floor. Well, I hope that you have you you've survived this drawdown. I think it's we had another down day on the market today. Very tough market to trade overall. Just difficult. Basically, just because of what's going on. With all of the things overseas. So basically, let's kind of get into it. The the Dow was down today again. So let's put that up on the screen. Let's take a look at the Dow and analyze that. I'm just going to go. There we go. Here's the Dow composite. Let's flip it over for everybody watching on TikTok. I mean, there you go. We have a situation where, let's see if we can move that over. There we go. Yeah, we have a situation on TikTok where we did, we bounced down. I think, we're likely to go lower even after this. So it's going to be, it's going to be interesting. Let's see if we can share that screen and for here. Yeah, there we go. So here we go, sharing that screen. I definitely think we're going to go lower on even lower than this. We had the dead cat bounce. This is actually the actual here. Let's jump on over to the spider and take a look at that because that's the S&P. And I do believe that we are likely to be at 320 on the spider here pretty soon. We're currently at 3,600. The question is what to do with this. Well, as you can see, if we look at the rising selling, you see how there every day it's another day of selling and it's going up and up and up. Basically, what's happening is currently the number one asset class out there is cash. So we're seeing that do much better against everything, and that's what's happening. People are selling off, they're liquidating, they're going into cash, and we can take a look at that if we look at the thing called the GSY. I'm going to compare that to the spider, and to give you an idea in the last year, the sort of how that's been, how that's been shaping up. It's really been essentially. Let's see if we can put that up there for everyone. There we go. There. So this is the comparison essentially against cash, which is this green line here. Now you notice cash has lost a little bit of value since the first of the year. It's moving down, but the spider has lost a lot more. And if we look at the Nasdaq and we compare all of these three indexes, let's go to the QQQ because this is that's even worse. So basically, what this is telling, at least telling me, is that right now the best place to be is in cash because if you have cash coming up, we're going to have an opportunity probably in this next year for some very, very high interest rates, maybe as high as 17%. So the move this year may be to be out of the market eventually and then into some of the interest rates. I think we're going to get 15, 16% interest rates in the U.S., but we're not there yet. The banks aren't doing that yet, but I definitely think we're going to see some very, very high CDs. I'm old enough to remember the Carter administration. He was in when I was in high school, and I remember for about 2 years there were very, very high interest rates paid on cash deposits, and I think we're sort of headed in that direction. So being in cash is not necessarily a bad thing. I mean, for the last really 40 years, it's been very, very difficult because cash has not been king. But we're coming to a situation very shortly where I think that's going to be the case. So just just FYI. All right, I want to show you something kind of what I think is very interesting here, and that is the performance of. Let's see if I can move it over here for everyone to see it. On TikTok. There we go. All right. So what I'm going to show you here basically is This little chart here, it's a swing trading performance chart. It shows us now I'm almost totally in cash. This line here, the one on the bottom, that's the amount of cash that that I've basically been in, and it's up and down, and then you'll notice it's almost nothing. Now you notice how the S&P is taking a dive. I believe that we're going to go even lower on the S&P. I think that's likely to happen. So, that is likely to happen, I believe. So, time now is really to be out of the market as much as you can in cash. And I think we will get an opportunity to do some shorting, but right now, I think that's the place to be. I also wanted to show you some shares. I want to show you the put to call ratio because this is an important metric that that's out there. It's the put to call ratio, and the way that works is um, that, as you can see, it's been moving up and up and up. Now, what does this mean? Well, the more puts that you have to calls, that's indicating a downward trend in the market. The more people that are buying puts relative to calls shows a downward trend in the market. So I don't think that we've put in a bottom by any stretch of the imagination. So I think we have to be really, really careful here and just really be very, very light in the market. We have to be very, very light in the market and just keep our powder dry. I really think that is indeed the most important thing. So let's take some questions. Thanks for waiting here. Appreciate it. Charles is saying, is there a chart or indices that follow that's how much money is in the market day to day? That's a very good question. Is there less money in the market now? Absolutely, there is, and I'll try to find you a good. Um, I'd like to find a good chart on that, but there is absolutely what's happening now is we're starting to see money come out of the market. We're starting to see it come out of the market into cash, and this means that and the reason why is because the interest rates are moving higher, and this means that if you're looking at investing in, say, real estate or investing in stocks, it may be better to just invest in bonds, and that's really what's starting to happen. So we're starting to see the bond rates move up. Now, unfortunately, I don't have any exact uh, chart for that, but let's take a look um, at the TBT, and this one definitely moves with the. This is an ETF that moves very strongly with the price, with interest rates. And as you can see, let's put it over here. The TBT has been moving higher. It came up to here and then it's just been moving higher ever since. And you notice it popped up here, pulled back, but it's in a trend, and that trend is right like that. So, where could you buy this one? Well, this one is probably going to do very, very well. Notice how we're getting lots and lots of volume in this. It's coming into this. What this one does is that this corresponds as the interest rates go up, bonds become less attractive. Old bonds become less attractive. People buy the new bonds, and so therefore it pushes up it pushes up this ultra short 20 plus year bond. So this is a short on that, and this is a way that if you don't have money, if you aren't allowed to shorten your account, this is one you might want to look at because I do think that we're going to see some very nice action on this. There's a lot of buying of this, and I do think we're likely to see this one go higher as interest rates go higher. If we get another interest rate hike, I think this one's gonna go up from there. But other than that, I would be pretty careful about being in this market. I would be pretty much out of this market just because, that's kind of the way it is. All right, let's look at the XLE and Exxon Mobil. Of course, these two are the XLE has a large portion of Exxon Mobil in it. So let's first look at Exxon Mobil, and there you go. And it's bounced at the 200-day line, and it's starting to get some nice support there. Let's look at it compared to the XO the XLE. This is the select spider that covers the energy area. Actually, ExxonMobil currently is outperforming. Um, uh, it's outperforming ExxonMobil, which is interesting because Exxon is a component of this one. So let's look at the comparison chart on there. There we go. As you can see, XLE. This is the Spider Select and ExxonMobil. So ExxonMobil is actually outperforming. Now, let's put in Oxy in here if you and take a look at that. OXY. I do think that we're likely to see a moderation in the price of oil. I think in the near term future. This is Oxy. It's done obviously, similar trace, but at a higher level. I also want to compare this to the price of oil, and that's really the key here. What I use is the crude oil index. The price of oil, as you can see, is going down. It's been moving down. Um, so we got that big spike, and now the price of oil, this WTCO, that's moving down. The XLE, which is the Energy Select Spider, that's also moving down. ExxonMobil is moving down, and then Oxy is moving down. They're all basically moving lower. So this is one of the reasons why probably don't want to, if you're down more than 7%, and any of your oil stocks, you probably want to get out of them now and then wait until we get a bounce. I do think we're going to see oil bounce at about 85. That's my guess on this, but we will see how that goes from there. All right, let's take some questions from TikTok and see if I can bring that up here. Thank you for holding here. Let's see. Okay. Most money you won in the most money you won. Well, let's look at Tesla and see what's up with Tesla. Um, I do believe that Tesla is going to move lower. It's sort of in a slump, and long term, I think Tesla's a great stock, but at least for right now, I think you got to be super careful with Tesla. With Tesla going forward, I think you really have to to be careful with Tesla. But right now we have. See if we can. Well, that's interesting. Um, so let's bring up the Tesla chart here. There we go. All right. So here's Tesla for everybody that's looking out there. Click it over. This is for this is Tesla yep, for everybody on TikTok. You'll notice it's lost support at the 200-day line, lost support, and it's trending lower. This may be setting up for a short. I'm not sure yet. Again, 145. We're currently at 266. I definitely think that we could move all the way down here to about the 200 level, and it is getting ready. It is setting up to be a short. Uh, believe it or not, it is setting up to be a short. I've been watching this one really carefully. We have a relative strength of 76, which is pretty good, but I do think that we are likely to see a breakdown in this one soon. So I don't know. I don't know. I'm not short Tesla yet, but it's on my short list. I'm watching it for a particular short. Charles is asking about telecom plays. I haven't seen any telecom plays right now because, of course, what we're seeing with the dollar. I still believe that at least in the near term future, and part of the thing is the price of oil is going down, but the value of the U.S. dollar is going up. So I think that really the play right now is to go to cash and wait. I think that's really what you got to do. It's really tough to do that because it's really really tough to do that. But I do think we're seeing the dollar appreciate against just about everything else. So right now in my portfolio, I'm 100% in cash, and I'm waiting for an opportunity. Now, I do think that if we get a lot of inflation next year and we have very high interest rates, which I think is very likely, There will be some opportunities, believe it or not, in things like CDs. I know that sounds very, very strange to you, but that's kind of what we're looking at. I think. I think we're definitely kind of looking at that thing. All right, Christine is interested in the spider and the Qs. Let's take a look at them both. The QQQ. There we go. I'm going to switch on over. This is the QQQ. As you can see, it's moving down. This is largely, of course, due to the fact that interest rates are going up, and tech stocks depend heavily on interest rates. So we have to be very cognizant of the interest rates. We have to be very cognizant of the interest rates as they go down. Now, also, let's jump on over and look at the spider, and there you go. Same kind of situation with the spider. They're both moving down. Now let's look at the performance of the spider versus the spider versus the Qs versus cash. There we go. Hold on. There we go. So um, if we look at the performance of these three indicators, cash, which is here, this is cash, the spider, and the Qs, you'll notice the Qs is the worst. So we want to stay out of tech right now at all possible. On the spider, we want to kind of stay out of the spider, and the only thing we really is looking good is cash. Now I do have a number of things that did perform fairly well today, and I want to show them to you. Let's see if we can do that. These are stocks of interest that I had here that you can possibly take a look at. One is Charles River's Lab. Interestingly enough, this one was up $6 today. They do pet health. Not recommending the stock, but it's very interesting. Aspen Technologies, World Wrestling, WWE is doing very, very well. And we have two of the other ones that are down. Nike down hard today, just because it's a really, really tough market. So here's the thing. I think you just got to be really, really careful with where you are right now. Right now, I think it's just basically a good time to be in cash, and that's really the long and the short of it. So, it's a definitely very, very tough market to trade. All right, we talked a little bit about the spider. TA. Okay, let's get TA. Take a look at that. TA. There we go. Travel centers. Well, they're doing okay. Absolutely. Travel Centers of America. That's of course a truck. Now, here's another thing about that. You've because let's see if we can share that out. This is Travel Centers of America. This is a truck stop company, and this one, does well. You know, this is doing well primarily because of the supply chain issues, but and one of the reasons, of course, is the price of diesel is at an all-time high. So this one's doing pretty well. I would not recommend it though. I'm basically readjusting myself to move to the short side because I think that that's kind of where you got to be. That's kind of got to be where you got to be. All right, a question from Christina, and this is my short on Lululemon, LULU. I did close this one. I don't have this one currently, but it finally, and I was waiting for this to happen, waiting for that, and then boom, it started. Yeah, so you can see Lulu set up, and then boom, there you go. So I think you're going to see a lot of weakness in retail. I know that a lot of people don't believe that, but This is almost a perfect pattern. It came way up and then down. There's going to be a lot of selling. I think now you're going to see a rally, but this one possibly is shortable as well. It's up in the after hours to 280. But I do think this one is likely to fall even lower. I think it's going to fall even lower on this one. I think you could definitely make some money on this on shorting this one. I've tried to short this a number of times. I think it's going to come down to at least right here, about 267 or so. But I think that we're going to get a rally. So the way to short this one is to wait for a rally day, and I think we're likely to get a rally day on Monday. And then if it rallies, that's where you want to short it. Let me take a look at the short interest on this one just to check it out. On the short interest, yeah, we have that's interesting. Short interest, 1.9 days. So we definitely had a squeeze. It's down 17%. So that's really interesting. I want to take a look to see how much of Lululemon is being shorted right now. We have 1.9 days, and the number of the average volume is 1407 700. That gives us that many shares and divided by the float. The float is 110 100 000. So yeah, we have about 2.4% of the shares of Lulu are short right now. So that's interesting. Very interesting. I think we're going to see a lot of selling. Okay. Question on ARLP. Let's look at that quickly. Okay, it's a nice pullback. Uh, coal. Okay. Um, yeah, it remains pretty strong. The coal stocks have been doing well, and this one definitely is the case. The only thing about this one, it's fairly thin, but other than that, it's good. I think that Germany's going to have to buy a lot of coal, so looking fairly good. All right, Jim, could you please check Nike if it's shortable down 60s for the next support? Very good question. Let's look at Nike. Nike, and I haven't shorted Nike. I'm going to do it this weekend. I'm going to do a okay. Here's the thing about shorting at this level. I think you have to wait for a rally. There's a lot of there's a lot of selling coming in here, definitely. I don't think this is. I wouldn't short this. I wouldn't cover at 60. I would wait to see if we got a bounce on this one, Nike. Yeah, look at that. That's a gap down, maybe six. So what I think is going to happen is we want to see it fill the gap. So we want to see it rally. We want to see it rally a little bit. I wouldn't short this one now that it's broken down. I'd wait for the rally and then I would short it. But I definitely think it's shortable. So that's very good there. Very good question. All right, let's take some more questions. CrowdStrike. Let's look at CrowdStrike. CRWD. This one may be shortable actually. Yeah. This one potentially is shortable. It's showing. Yeah, it looks like it got up to the 10-day line. Relative strength though is improving, which is interesting. Um, so let's see if that makes sense here. Hmm. Okay, came off that, rallied up to that. This may be shortable. I would probably let's see how far away from that um, the 21-day line it is. And it's a little bit far. So what I would do with this one, I think you could short CrowdStrike, but I would wait until it rallies to closer to the 21-day line here. So if there's an uptick on this one, that's where I would be looking possibly to short it. Possibly to short it. Well, everybody, thank you so much. I I know it's been a really tough week in the market, just not a great time at all. It's definitely harder when the markets are like this. I'm currently pretty much all cash. I'm looking for shorting opportunities right now, and hopefully we'll be able to find some of them. If you're not already on I'm going to try to put out a letter this week on some shorting opportunities, but you got to be on the list to get it. So if you could go to www.dallastradingfloor.com, the first and last name and the email address, and you'll be all set up for that. Also, if you're looking on TikTok, just go up to the link that I have in the bio, click on that, and you'll be good to go. So until Monday, I'll be back on Monday, and hopefully you'll get this email if you're signed up. Happy trading, and please, please, please like our show. It really helps us. It really helps us get out there to a lot of people. So please hit that like button. Really appreciate it, and also subscribe as well on YouTube. I'll be back tomorrow. I'll be back on Monday at 5 o'clock. Thanks, everybody. Happy trading.